What's happening, everybody? What's happening, everybody? We're back again. We had a little back. We're back. We're back. We're back. I want you guys to stick with me because we have a lot to give you in a short time to give it to you in. And I want you guys to grab your pen and your paper handy because I'm going to be dropping you some information today that's going to actually absolutely change your entire world. So let's not wait any longer. Let's get right off into this. If you can hear me, definitely comments, even if you're hearing this on the replay. Actually, I think I'm going to set this up now to make sure that the sound and everything is good, like we intend for it to be. As well as the comment section is open, so you guys can definitely list your comments because I want you to be able to get all of this work. First of all, this stems off of a post that I posted up on TikTok, and I'm going to be sharing my screen with you guys so you can see exactly what we had going. So you can pretty much get a little background and understanding on what we are doing or were doing. So let me make sure that this sound is good. What we are doing. Yes, the sound is good. So I'm going to take you over right now, and because now this is the difference in understanding, and I'm taking you guys somewhere. The comments are open, so you guys can ask questions as I give you this. I have been blessed and fortunate enough to be around some business people, very successful business people. And I have been fortunate and blessed enough to get some information on how the wealthy play the game and how they basically are able to live the way that they live. Now, what I do, I take that information, now not having the mega millions that they have, but I take the information that they give or that I am impervious to, and I apply it to me and my financial demographic so that it will benefit me. Now, and as well, what I do, I give it to you. I give that same information to you so you can take it and apply it to your life and you can live well. Now, when they say that there's enough money for all of us, ladies and gentlemen, there is enough money for all of us and for all of us to live well and eat good. So now this post that I put up, and I'm going to share my screen with you guys so you will know exactly where this is coming from. I put up this post and it was telling the audience, how you can write off your house as a renter. This is the one, buying a free house. Now, what this post was about was it shows you how to take your home. And he was going in detail and telling you how you can take your home, rent it from yourself, write it off as earned in, well, you'll write it off on the business side. And instead of you buying the house, your business buys the house, rents it out to you, and then you can get all of your rent money back. You can write off HOA fees. Let me just let this video play. It's only 30 seconds. So I'm going to let this video play.
On your tax returns, there's a document there's a 2-page form called a Schedule E. Every single expense you have for that property is listed on that Schedule E. You get to write off the taxes, the interest, the insurance, HOA fees, property management fees, any other expenses you have. And here's the big one, depreciation.
Now, let me stop right there because this video, he just told you everything that you can do with your house. Now, currently, ladies and gentlemen, if you own a house or if you're renting a house right now, let me stop sharing. If you own your house or renting a house, even if you're renting, that's a different set of rules or a different game, but the game still applies. But let's just deal with those of you who own your home. If you own your house right now and that house is under your government name, all the money that you are putting into that house is just going out. You have no boomerang on your money. If you upgrade that house, yes, it's building up equity into the house, but that's you're only getting a higher evaluation on the house, on the value of the house in the events that you want to sell the house. So you can only cash out when you sell. You understand where we're going? Now, when you have when your home is owned by your business, understand what we do in this space, the business owns the house. We fill out a lease agreement. I fill out a lease agreement and rent my home from, or rent the house from the business as if it was any other rental property. Now, the business, or you being the business at that point, you will add another IRS filing form to your filing papers called a Schedule E. Basically, ladies and gentlemen, you're renting your house from your own self. Because now, here's the thing. You as the individual person don't get any tax breaks. You're going to pay that property tax every year, whether you like it or not. Then all you're doing to the house is just building up equity. So you bought a house for $100,000, you remodeled the bathroom and the kitchen, and now the house is valued at $250,000. That $250,000 does nothing for you until you sell it. So what do you do with all of that time now? Now, the content was saying over the course of 27 years, you can put that, get all of that return back. That's on a standard 30-year mortgage. The pushback from the multitudes of people, and I'm going to show you this, guys, again. The pushback from all of these people are people, majority, that have never heard of this. Now, this is one of my viral videos that's coming, that's already out. It's well over 7,700 shares and saves, 175 comments, 11,000 likes. Now, this video has been viewed over 230,000 times. That's not nothing to brag about. I'm just telling you the amount of hits
on your tax
and
returns.
people
There's a document
that have been talking about this. Now, here's where it gets different. These people are standard average employees. They have never filled out, even the majority of you who already own your home, you have never filed a Schedule E, as in Edward. The majority of small business owners haven't gotten past filing a Schedule C. Now, a Schedule C is great. When I first started out in business, I was filing a 1040 Schedule C. And what that Schedule C was, I had a side business or a side hustle that I was making extra earned income. The majority of business owners who fill out a Schedule C, we only use that Schedule C so we can buy stuff at wholesale. So when I first started having the leather business, I got an EIN number and all of that stuff, got everything set up, filed on the Schedule C, but I did that only so I can buy my leather at wholesale cost. This was back in 2001. I still had no idea that I could write off my house. I was still learning, young in the business game, because this is the stuff that they don't teach you in school. This is why the overwhelming majority of us don't know about filing these different tax forms because we were never taught it. All that we were taught to do was to go to school, get an education, put in an application, and be an employee 20, 40 years till you die. And hopefully you can die safely, like go peacefully in your sleep. Like that's not the case for everybody. So what we come across is, I didn't know that I can write my car off. I didn't know that I can write my house off, my utilities off, my food. I didn't know that I can write my birthday off. I didn't know that I can write off vacations. And I'm filling out that Schedule C, just like a lot of you. But this is when I started. Now, I just had a regular standard business. I had the business license, the ones that hang up on the wall with the little Dollar Tree plaques that you go and you got the green and the blue one and the white one for the city, the county, and the state. That's all. And most of us think that that's it to having a business. Most of us think that's all that we got to do is just get them 3 little pieces of paper because that's all that we were taught. That's all that the gatekeepers wanted us to know. But we were still getting beat over the head with taxes. I'm not a gatekeeper. I'm not a gatekeeper. I'm a timekeeper because this is why when I drop free game like this, I don't want any of my audience or any of my listeners just taking what I say and running with it. That just makes you a sheep. Never take anybody's word, not even your preacher or your pastor or whatever the term is you want to call a minister, reverend, whatever, bishop. People come across these stages and these platforms and they just saying stuff. Where we fall in error as a people is we take that and just run with it. And then when we get to the next step or the next stage, then we don't know how to answer the questions, or we don't know the proper steps to take it up. Well, I heard, man, somebody told me that I could do this. One thing that I love about the Nation of Islam, when I first started practicing this 27 years ago, don't take nobody's word for it. Go back and research it for yourself. You cannot learn this game off of a 30-second video clip on TikTok. We put the information out there to whet your appetite so you can go back and research it for yourselves. Now, I'm going to go a step further and show you. So, and again, the number of people that was coming back and saying, you can't do that. You're going to get people locked up. You're going to get folks arrested. That's fraud. I asked one simple question. Have you read the information? Have you done this before? Have you ever asked your tax professional about this form, Schedule E? You know what the answer is? And I'm pretty sure you already know what the answer is. No. How do you know it doesn't work then? I just know it don't work. I ain't never heard of that. It wasn't supposed to be for you to hear it because you are not in that financial bracket to have this information. Ladies and gentlemen, this information, this Schedule E form has been primarily reserved for the 7-figure income and over. So from your rich to your wealthy to the super rich. Now, again, basic information. Most people don't know rich has a bracket in a space. You are rich when you hit $1 million to 99 million. Rich. That's rich. Wealthy is 100 million and over. Super rich is when you hit the billy club. You can't stop making money. Even if you quit work, you can't stop making money when you hit the wealthy bracket. People that's rich, they still got to work. They still got to work. But because I know some $1 million doctors, $1 million doctors, if he don't go and perform surgery, he don't get paid. See, that's people who still working for, they still got to work for their money. When you hit that wealthy category, now you're getting portfolios and diversified income. Now you can diversify your income on an $80,000 salary. But you got to know how to do it. This is why I take that information from that upper crust and I bring it right back here. This is why it's all foreign. A Schedule E is all foreign to a lot of people on this playing field because we never were taught this. The majority of you didn't even know that you can write your birthday off. Yes, you can. Why did they teach you that in school at? I'll wait. What class was it? Where did they teach you that you can write your vacation off? I'll wait. Where did they teach you that you can take your wife out to dinner, or you can write your let me just say it like this. Where did they teach you that you can write your clothes, your meals, your shoes, your where did they teach you that in class? You never knew about that. And it was never intended for you to know about it because the mindset is you are an employee and you can only fill out this 1040 easy form or this regular 1048. Now, we will give you those little boots. You can write off 2 pair of boots a year. We'll give you that. We'll give you that little lawn care business that you got on the weekend. We'll give you that. But this is what they don't tell you. They don't tell you how to be exempt. They only tell you how to make more earned income. If in the millionaire's world, if a millionaire made $1 million, he's trying to find a way to write off 800,000. He's trying to find a way to get rid of 800,000. Now, why is that? Let me tell you why. If you made $100,000 from your job, let's just use whole numbers for example. I don't know what you make. You made $100,000 and you have this business on the side, or you have another business. You do hair, for instance. Now, this is how the wealthy plays this. The wealthy don't want to pay taxes on $100,000 plus the money that they made from the side. That puts you in a higher tax bracket. Now, when you add these two incomes together, the government recognizes your job automatically because you pay taxes on that per check. They taking out money every check. Now your salon is you're only doing that on the weekend, and you don't get a W-2. A W-2 or a paycheck from that. So the IRS is wanting you to be honest and report what you made. So let's just say you made another additional $20,000. So when what the IRS does is they add that 100,000 plus that 20,000. Now you're in a higher tax bracket of 120K, but they're saying, wait a minute, you're only reporting 100,000. So now they got to hit you with more taxation. That's how it works. This is what the wealthy do. The wealthy, 100,000, business on the side. They want to take 40,000 and shuffle it over here to the business, because now what they're telling the IRS is, I want to say that I am taking 40,000 and funding personally my own business to keep my business going. If you want to pay less tax, you have to change the facts. And the fact is, I took $40,000 of my personal money and paid for my business to stay afloat so I can eventually leave this job. So what that does in that time, it lowers you out of the $100,000 tax bracket because you took $40,000 of that, put it over here to the business, and now you're only paying, you're telling the IRS, I only want to pay tax on $60,000. Now you have a return on the personal side. See how that works? It's simple. It's so simple. If you took $40,000 of your personal money, that drops you out of the $100,000 tax bracket because that $40,000 was an investment into your business. Any money that you invest into a business is not earned income. It's money going out. This is why the game is played like this. This is why when a multimillionaire or a rich person makes $1 million, they want to find something to invest $800,000 in so they don't have to pay taxes on $1 million. They'll pay taxes on $200,000 because I got $800,000 out there working and I ain't made that money yet. Now, the legal term is deferred taxes. I'm going to eventually pay. Don't let nobody run this game to you, because I had some people that was commenting about that. I don't pay taxes. Lie. Everybody pays taxes. Don't trick yourself. If you're buying clothes and you're buying shoes, look at that receipt. It's some taxes you paying. If you own a house, rent a house, if you got utilities, look at those receipts. You are paying taxes. Don't let nobody fool you with that. I don't pay taxes. Lie. And the truth ain't in it, like my mama say. Don't let nobody, we have to stop tricking ourselves and thinking that the government is letting us slide. You even get taxed, even if you're on Social Security. Look at your check. You're getting taxed off of money that you've already been taxed on. Look at your paycheck. If you have a job, you get taxed before you even get your check. That's gross and net. Then you go to the gas station, put gas in your car to go to work on a check that you've already been taxed on. You're getting taxed at the gas pump. Then you go inside that store and you buy you a soda and a Payday, my favorite. You're getting taxed again. So what we do is we learn these techniques and these strategies and these principles and these forms in order for us to not pay at this time. Deferred. We're going to defer this later on down the road. Now, let me get to showing you guys this right here. This is important because one of the things that these people never do, and it's not these people, I hate to say that term loosely like that, but what people do not do, people want everything ready-made. Again, you can't learn this in 30 seconds, real video. You can't learn this in a 30 or 45-minute podcast. I put this information out there hoping that it will spark somebody to go back and research it for themselves. Now, in your research, once you research everything that I say or other influencers say, it will do two things. It would verify and validate. That's all that it's going to do. Verify and validate. Once it's validated, once it's verified, now you're going to come back to remember saying, oh, that's what he was talking about. So yeah, I can do this. Once it's verified And your spirit, this is why the book called Bible says, where one or more are gathered together. Now, the scripture says, in my name. So let me tell you this. If one or more of you gather together in what I'm telling you, the truth is right there in the middle. That's what, ain't that what the book say? Jesus said, I am the truth, the way, and the light. And if I am in the middle of all of y'all, the truth is in the middle. So when you go back and research this and verify, then it's validated. Now everything that we tell you, or other influencers like myself tell you, there is the truth. Because we all are going to come into agreement. Let me show you something right here. Boom. First thing that anybody should do from that reel is go to the irs.gov page. You can go straight to the source, straight to irs.gov, type in Schedule E. You can Google it, ladies and gentlemen, if you don't want to type in irs.gov. Just Google search 1040 Schedule C tax form. And then Google is still going to bring you right here. Google is going to bring you right here. Now, if you read this, let's just go right here. About Schedule E. It's going to tell, oh my God. But out of 218,000 people, over how many comments it was, I can't remember right now. Out of all of those comments, nobody said what form. See, that's again the difference between, this is why laziness is a sin. We are in a society where we want everything to be ready-made. We all wish that everything was ready-made, but that's not actual fact. So we click on to this Schedule E form. Boom. I want to see what the form says that I can and cannot do. Here it is again. You're still going to file a regular 1040. That's the personal side of your taxation. This is the personal side, the 1040. The Schedule E side, just as it is with the Schedule C. A Schedule E is the business side. And it's all there for you to put the information in. This is all about renting your house from your business. If this was not true and you could not do it, there will not be a form for you to fill out. Ladies and gentlemen, it's just as plain as the nose on your face. If you could not do this, there would not be a form for you to fill out. Right here at the top, supplemental incomes and losses. Physical address of each property. Now, here it is. You will find, you can, if you got one property or three, A, B, and C, you just plugging in all the information, rents received, how much rent that you pay every month. You can set that up. Let's just say you own the house. The business owns the house. The mortgage is $750 a month. I'm just throwing some numbers out here. $750 a month times 12 months. Now, if this was a regular rental property and you're renting the house, most renters, not the rentee, the renter is going to say, my mortgage is $750. I'm going to charge $1,100 so I can make me a little money. Common sense, right? So you write that rent agreement up to say, okay, I'm going to pay $1,100 a month on this rent. and then that $750 is going to go to the mortgage. You're going to pay the mortgage anyway on your house if you're owning or buying a house. Now, if you own a house, it's even better because all of that money that you're paying in the form of rent is pure profit for the business. But if you're buying the house, now you got the money coming in the form of rent to pay for the mortgage, pay for the insurance, pay for whatever other expenses you acquire on that, and you're buying it from yourself. You buy it now. I say buying it from yourself, but that's not the proper term to use. You're renting it from a business. So you're renting the house from the business. That's the power of having the LLC, ladies and gentlemen. It awards us those luxuries to a limited level. Now, at some point, you're going to switch over your LLC to an S or C Corp, but you keep everything still in the same plan. So when people start telling you, man, y'all better stop listening to Muhammad. Muhammad gonna get y'all locked up. Look at the form. It allows you to do this. Now, listen, let's get right on down here. Your rent received, royalties received, advertisement. If you advertise renting the house, auto, travel, cleaning, and maintenance. You can even hire your own maid, and it's a tax deduction. Come on now. Your insurance, tax deduction. Management fees, which you will have an LLC, that's a property management company, and they charge a fee to maintain and rent the property. All of that is deductible. Your mortgage interest paid to banks, deduction. Everything that I said in the video, those 30 seconds, everything that 30 seconds was in the video, you're verifying it right here. Repairs, if you want to get the a water pipe busted, repairs right off, supplies right off. Your property taxes goes right here on this line 16. Utilities. Now, have anybody ever heard of an efficiency apartment or an efficiency house, a mini house? Most of these particular structures or domiciles are all the bills are all inclusive and you pay one price. You can do that for yourself because why? The business owns the property. So if you want to say, all right, here's the thing with the rent. The rent is $1,500 all inclusive. That's utilities, blah, 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 blah. We even got people that come out here and cut the grass. What you do in that regard is you start a business for your child, your niece, or your nephew, or I'm going to say whatever, whoever you wanted to start it for, your son. They have a lawn care business now, and you hire your son, your niece, or your nephew to come out, cut your grass, cut the shrubs, rake the leaves, plow the snow, whatever the case may be, wherever you are. And then the money is doing this right here. It's just going in a circle. See how this is what we have not been privileged to learn because it was not intended for us to know. I don't get upset because people push back. I get perturbed because people's lack of they want everything ready-made. Now, is this a lot more paperwork to cover? Yes, it is. It's a lot. You got to keep up with all of this. This is one reason why everyday commoners, people like us, don't do it. Employees, let me say it like that. Because it's too much work. People don't want to do the work. They don't even want to research, Google a Schedule E. Now, and this is just one page. Now you subtract line. That's just simple, blah, 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 blah. Then now here it is right here. Look, this is the second form on the back. This is where it gets good. You guys can read this on your own time. For the sake of time, you can read that on your own time. It's a 1040 Schedule E. Now, if you're a regular business, it's a I was talking with somebody the other day, and there is just to tie in. This is just what we're talking about. What to tie in. The information has been out there. It's been out there for decades. I don't care what age you are. I don't care where you went to school at. Certain information is not for certain people. It has never been intended for certain people to have certain information. This is why way back when, it was never intended for the majority of Black people to read. Because if we started reading, now we know the same thing that they know. That's the biggest threat to the wealthy people of the world, is for the everyday commoners to know what they know. People have been getting rich off of this for years. Now, you can't rent, one of the comments, you can't rent from yourself. True. True. You can rent from a business. And if you own the business, this is where LLCs separate. You have to do that separation form. You have to separate your personal from the business. So the money that you're paying to your rental company that you own, you can't go over there and cash that money out and put it into your personal bank account. That's illegal. That's illegal. Even in your business, the business that you have, are filed on the Schedule C, you can't take that money legally and play with it for your personal. But wait a minute, Muhammad, I thought you said I can write my vacation off. Also remember what I said, if you want to pay less tax, you change the facts. Stop calling it a vacation. For one, it's not a vacation. And I did this in another podcast where I touched on it a little bit, but I'm glad because it's leading up to this. Same principle. That's not your house. You're renting that house. So be careful with the language. Let me tell y'all something. Nobody of means, no person of means or money, their name, their personal name is on nothing. Because we have been taught to put your name on something, own it. Man, you better buy you a house and have you something that's yours. Trick. Let me say that again. Trick. That's the trick. Because this is what they didn't tell you. Everything that your name is on, you got to pay taxes on everything that your name is on. See how they withheld that information? But wait a minute. I see that big old mansion Jeff Bezos got. I see that big mansion that island that Bill Gates live on, where he has enough fiber optic cables that can wrap around the earth twice. Where you walk into a room, the room is pre-programmed to your body, and that temperature will change when you walk into each room. But here's what they don't tell you. Bill Gates don't own that island. The Bill Gates Foundation owns that island, and they just let Bill Gates use it. Jeff Bezos don't own that mansion in California. Amazon owns that mansion, and they just let Jeff Bezos use it. See, simply changing the facts that will put more money into your pocket. Ooh, y'all still not picking up what I'm putting down. When you own something, you can do what you want to with it. When your business owns something, now, when your business owns something, now you can make money. So, and then one person that commented, well, what if I move and want to get another house? Do it. But you still keep that house as rental property. You just became a multi-property owner at that point, and life gets real good because now whoever you rent the house to after you move out of it, you're renting it to them. So guess what? This is what we call money in perpetuity. That means forever money. We are vastly changing into a rental country. If you guys haven't seen it in your cities and in your areas, you should know that everybody renting now. And rent is so high. Ooh, it's higher than a redwood tree in California. But that's money for you to take. So now, if you're renting it from yourself, you see another house you want to move into. All right, cool. Now you own, you don't buy the second house. Your business does. Now your business has two rental properties. And since you had such a good rental rate with the first rental property, guess what? That rental company that you own is nice enough to let you rent another one. See, this is why I get excited about this information, because I didn't know that you can do that. As long as I've been in the world, nobody ever told me that. I never read that in any accounting book. My tax preparer didn't tell me that. Why? Because my tax preparer didn't know. See, here's the thing, and I've said this multiple times. There is a difference between a tax preparer and a tax professional. You need to find you a tax professional. See, a tax preparer, they take that 6 to 8 week little training course from H&R Block or Jackson Hewitt. Them folks don't know. They don't know. It ain't their fault. They don't know. They only are trained to do employee taxes. That's why they couldn't tell you about a Schedule E. That's why. Now, think about this. If there's a Schedule E, I wonder what Schedule D, Schedule F, GHIJKLMNOP. I want to know what else I can write off. Because now, if there's a Schedule C, what is the Schedule A and B? That's somebody who does research. You just don't skip over. Do you think the IRS just came up and said, you know what, we're going to call this a Schedule C? Well, what about A and B? What is A and B? What's on those forms that I can write off and make money off of? And I say make money because, again, when you are in a lower tax bracket, that's the return or the deductible. We have been taught as employees to go after the return. That's why your tax preparer asks you all of these low hanging fruit questions when you go in. Now, when you think about this, a tax preparer is only trying to get that little bit of money, whatever they charge now, $300, they charge you to do your taxes, you in and out in 20, 30 minutes. That's of course, they only going to grab the low-hanging fruit. See, a tax professional, they know it's 2 taxes in a year. It's 2 tax seasons. How many of y'all knew that? Drop a 1 in the comment if you knew that it was 2 tax seasons. See, we're only taught that is 1 tax season, January through April. That's for employees. See, there's a different tax time from August to December for the rich and the wealthy. See, through August to December, that's when people with money are trying to not hide, they're trying to invest, something to invest in. Something to invest. So they ain't hiding it. They just don't want to pay the taxes on all of that money. So when they file in January, that was a deduction. And now I'm making more money. This is what ruffles the feathers of the Democratic Party. This is what ruffles the feathers of Democrats. Y'all ought to pay y'all fair share. Why? I don't have to. That's the one thing about the Democratic Party that keep me from being a Democrat. They want everybody. You're not just finna keep giving it to me and I don't get no relief. No, man. I don't care what nobody say. I mean, you got people like that, and y'all have had people like that come up to you. Man, all that money you got, you can give me $100. Man, I worked for this $100. I'm not finna give you nothing. It ain't nothing in the world that tell me I got to give you anything. Man, that big old house you got some, man, you can let me stay in there. No, because I have rules. I was able to get this house because I go by a certain code of rules. I don't allow my children to jump up and down on the couch on my furniture. My own. But you gonna let your bad youngins come in here and jump all over my stuff? No. This is why you can't come here. Now, when you get your own, you can get your own. You can let them turn your couch into a trampoline if you want to. And I'm saying this because this is the same way that it is in business. I have what I have, you have what you have because we live a certain way. Now, what I am simply is showing people to do is learn more of it so you can increase what you have. Did you know that you get a tax refund is a bad thing? You didn't know that. Drop a 1 in the comment, man, if you thought that a tax refund was a good thing. If you knew it was a bad thing, why do so many of us look forward to it? You know why tax refund is a bad thing? Let's just deal with the word refund. Anytime you attach the 2 letters RE to anything, it means to do it again. So that means you have already funded too much money and they're refunding you with money that you overpaid. But so many of the mass Americans look forward to getting a refund. I train, or I don't want to say I train, I teach my clients, don't even look for a refund. Actually, even if you got to pay go for $100 and less. If the IRS tell me that I owe them $100, I'm finna write that check so fast. Whop, here you go. Look at it. Look at it this way. Again, change the facts. Let's just say you got $3,000 in a tax return this past year, 2023. Divide that $3,000 by 12 months. Divide whatever your return was, divide that by 12 months, and then ask yourself this question. Could I not have used that money last year? Instead of waiting, the IRS made you wait a year to give you back money that you overpaid. Couldn't you have used that money last year? How much better would that have improved your living condition or your livelihood if you had kept that money every month last year? Now, ask yourself this question. I had to pay $78. Now divide $78 $78 by that same 12 months. I underpaid $78, which made me mad because I took it at that point. I forgot to write something off. I lost the receipt, or I paid cash for something that I shouldn't have never paid cash for. That's when I get mad. I don't get mad at the fact that I have to pay. I got mad at the fact that I left something off. But $78, break that down, divide that by 12. 9 times 12, what is that? 78, divide that by 12. I underpaid $6 a month, a little over $6 a month. I underpaid. But that's still not as bad as what you overpaid. So if you want to change the facts, you want to pay less tax, change the facts. Stop calling your vacation a vacation. Call it a business retreat. Ooh. Go back and watch that podcast. I gave y'all the game on that. How you can write off your entire business retreat as a tax deduction. I also gave you the game on how you can write off your birthday as a tax deduction. Gave you the whole game plan. This is what the wealthy do. Even your car. Black America, and I said this in the last podcast too, Black America, and you can Google this. Do your research. Don't take my word for it. Go back and research it for yourself. Black America, just the black people in America, and it wasn't all of us because I don't own a Benz. Black America bought more Mercedes-Benz than any other people in the world. We outbought the Arabs. We bought more Mercedes-Benz than Europe, than Germany. Come on, the whole country? Black America, black folks in America bought more Mercedes-Benz than the whole entire country of Germany, where they made at. Ain't that crazy? But here's the key part. The Mercedes-Benz that Black America bought was the 300 series and under, not a tax deduction. See, wealthy people don't care nothing about you buying a Benz. They don't care nothing about you buying no BMW. They don't care nothing about you buying a Maserati. They don't care nothing about that. They laugh at the fact that we buy the ones that you can't get any tax deductions off of. The wealthy people don't care nothing about you buying a house into the suburbs and you struggling to pay mortgage. They don't care nothing about you moving into their neighborhoods. You ain't gonna be there for long. They know this because you don't know how to write off the whole entire house. See, they get a tax write-off for their mansions. You don't. You're not even writing off your house for the one that you got in the hood. So this is the game, ladies and gentlemen. Go back and research for yourself. Listen, I am RD Muhammad, your favorite plug, plugging you in with the info that you need in order to help you be more successful. Guaranteed, hands down. Once you learn this game and you learn how to set this up, I'm telling you, it starts with your tax preparer. Ask them. This is what you do. I don't care who's doing your taxes. Ask them this question. How can I write my birthday off? How can I write my vacation off? If they can't tell you how to do that, you need to leave Auntie and Uncle Fred alone. You need to leave Auntie alone because you need to leave H&R Block, Jackson Hewitt alone. If they cannot tell you how to write, that's a simple question you ask your tax preparer. How can I write off my house? Full deduction. If they can't tell you how to do it, you need to get away from them. And if they do tell you how to do it, why haven't they told you how to do it before? Because the system is not designed for you to do that. Your average tax preparer is only trying to get that fee that they're charging you to file your taxes. That's it. They're not trying to find you no loopholes. They're not trying to find you no tax breaks. They're not. This is why you need a tax professional. A tax professional, you're going to pay them, most times you're going to pay them a retainer all year. They are technically called your financial planners or your financial advisors or your CPAs, these different types of title. That's a professional. They know where the bodies are buried. They know that. Why do you think Donald Trump was paying his CFO millions? Because without the CFO, he wouldn't have known how to file bankruptcy 27 times and still be a billionaire. See the difference? H&R Block can't tell you how to do that. Jackson Hewitt can't tell you how to do that. Auntie that's been doing your... These people are just called data entry people. All they know is how to enter data. That's all they know how to do. Because as long as you've been living, nobody's ever told you how to do this, and they didn't tell you how to do it either. Hey, listen, I'm RD Muhammad with Plugged In. Look, come on back, y'all. I'm going to be dropping info for you guys all the time. All you got to do is go back and research it for yourself. So when you verify and validate, y'all show me some love, man, and come back on here and subscribe to the channel so I can keep giving you this work. I'll see you guys on the other side. It's lovely. It's lovely. It's a jungle out. Peace.